Hello. So many traders may believe that their backtesting results will continue to work in the live environment. However, if this turns out not to be true, then many traders may start to blame themselves, but they actually may be missing a structural explanation. Therefore, before we delve into that, let's look at a quick comparison between backtesting results and live environment results. Now then, let's say we've got some strong backtesting results here, where there's a sample of 1,000 trades and an expectancy of 1.94 R. So based on these numbers, you make the decision to deploy your trading system in the live environment. However, within the first 50 trades, you start to see that your expectancy has fallen to 0.90 R. And although this is a small sample compared to the backtesting, it starts to introduce confusion because the results are simply not matching. This problem is first identified when profit targets are not being reached, and as a result, drawdowns are higher. So naturally, confidence starts to deteriorate and traders start to actually question their trading system. But there is a structural explanation, and we're actually going to discuss this right now. Now, from a structural perspective, the live environment may actually represent a different market regime compared to the backtesting environment. This means that market forces may have combined to create different characteristics for the market, and therefore historical trends, volatility, and the distribution of outcomes may have all changed, and as a result, expectancy would have changed as well. So, this highlights the importance of evaluating your backtesting results in as much detail as possible by asking questions such as what is the expectancy of the full backtested sample? What is the expectancy of a smaller 12 months or 24-month sample? What is the difference between the expectancies of the two samples? And probably most importantly, is it worth trading my system during this current market regime? So overall, this highlights that your backtesting results may not replicate themselves in the live environment. And the key is to understand the balance between historical backtesting statistics versus more recent data in relation to a more current market regime. And this should then provide the framework for a more stable system and contribute towards more consistent trading performance over time. So if you'd like to learn more about trading expectancy or structural analysis, then I provide additional information in the description below. Thanks for watching, and I'll see you soon. Bye for now.